Good afternoon and welcome back to the Smarter Wealth channel. I'm your host, Troy Lerche, bringing you the Week in Wealth. This is for the week ending December 10th, 2021. Today's video will be a short one, just a quick summary. We'll see getting ready for the holidays. I hope everybody's doing well and staying safe out there from the new COVID variant that's starting to spread. If you guys, I don't know if we'll have content over the holidays, but if you want to make sure you don't miss anything, please hit the like and subscribe button, and we'll jump right in. The CAPE indicator is up from last week to 39.53 from the prior week's 38.29. So a pretty good jump with the markets being up last week. We're still in bull territory, and we have 3 of the 4 indicators are positive. In the U.S. markets, we had the S&P hit all-time highs as the market shook off the Omicron variant. The fear subsided. The Dow was up over 1,390 points, which was a gain of about 4%. The NASDAQ rallied about a little over 3.5%. And by market cap, we had large caps were up 3.8, mid caps were up 2.9, and small caps were up 2.4. For international markets, all the international markets were up in the green last week, as again they recovered from a 3-week sell-off from some of the fears and concerns over the new variant. In commodities, we had a mixed bag. We had gold ticking up a little bit, silver pulling back, crude oil finally bounced back a little bit from 6 weeks of selling, which was up 8.2%. That's a big bounce. And then copper was up just a fraction, right around 0.5%. In the U.S. economic news, we had American workers continue to quit their jobs at a record pace, giving rise to what experts are calling the Great Resignation. But we do see companies continuing to boost wages and benefits in an effort to attract and retain workers amid the biggest labor shortage in decades. On the inflation front, we do see the cost of living climbed again last month, lifting the rate of inflation to a nearly 40-year high. We see over the past year, the pace of inflation jumped another 0.6% to 6.8%. It's more than triple the Federal Reserve's target rate of 2%. A senior economist at BMO Capital Markets wrote, "The Fed has little choice but to accelerate tapering and prepare for the possibility of much earlier rate hikes than was planning just a few months ago." So we're continuing to watch that and seeing how it's going to play out as the Fed has, consistently used the word transitory, and we're starting to see it hang around, and we'll see how they respond. And finally, Starbucks, the company everybody loves to swing by in the morning and grab their expensive coffee. Starbucks location in Buffalo, New York, had voted for unionization during this past week. So it's the first time the union won the right to represent Starbucks workers in that company's history. Starbucks has an army of nearly 235,000 workers in the U.S., and Starbucks management has spent a lot of time and money over the years dissuading the stores from unionizing. It's a sign that a turn in the fortunes of union membership. Is this a sign of a turn in the fortunes of union membership? Over the past 50 years, private sector unionization has collapsed. Private sector unionization has dropped by almost 3/4, from about 24% in the early 70s to about 6% currently. So if Starbucks vote is a sign of things to come. There's a long road back to previous glory. So, and please check out this information in our Week in Wealth piece that's sent out. Hope everybody does well, and we'll talk to you soon. If we don't have a video next week, I hope everybody has a very Merry Christmas, and right after that, Happy New Year or Happy Holidays, and we'll talk to you soon.